So even today, the FII figures show a net sell. Now, what is actually going on? Why are the Indian markets falling? You need to understand that. There seems to be a rotation out of India stocks into Chinese stocks. Do understand that. The MSCI China Index up 26.4% so far from its January low has gained nearly 18% this year, while the MSCI India Index has lost over 7% year to date. Every time the China market goes up, the Indian market goes down. Over 50% of the funds surveyed have shown that they had cut their allocations to India by the end of January, while allocation to China and Hong Kong stocks increased. What is the timeline at which this big change took place? DeepSeek's breakthrough in artificial intelligence has boosted investor sentiment around China stocks, with a gauge of the country's onshore as well as offshore shares soaring by over 26% since its January low. The surge in Chinese equities comes at a time when the Indian stocks have been languishing in correction territory, with experts pointing to a rotation away from India into China. Every time the Chinese market, as I told you, goes up, the India market goes down. China's CSI 300 had given negative returns for 3 straight years before logging strong gains last year, while the Indian equities have seen secular growth for the past 9 years, but returns in 2024 were much lower than the year before. Chinese stocks, led by a tech rally, have been on a tear since the release of DeepSeek's R1 model in January, as it challenged the US-led artificial intelligence ecosystem, claiming superior performance at a much lower cost and using much less advanced chips of NVIDIA than the more established artificial intelligence players were using. The Hang Seng Tech Index, which tracks the 30 biggest technology firms listed in Hong Kong on Friday, hit its highest in nearly 3 years. Alibaba was up more than 12%. So it seems to be everyone and his brother is shooting to the roof. Meanwhile, the MSCI China Index, up 26.5% so far from its January low, has gained 18% this year, while the MSCI India Index has lost 7%. Now, India's economy has been grappling with a slowdown. The stock market has corrected sharply in recent months, and the near-term earnings expectations remains muted. India's gross domestic product grew by 5.4% in the quarter ended September, reflecting the weakest growth in the last 7 quarters. At the start of the year, the government lowered its economic growth projections for the fiscal year ending in March to 6.4%, the lowest in 4 years. By the end of January, 33% of the large global emerging market funds surveyed were overweight China and Hong Kong equities, up from 26% in December. Conversely, there has been a 6% increase in global EM funds, becoming underweight on India equities. But is there no problem as far as China stocks, or could there be a problem that can happen down the road? I think that one needs to be a little careful. Chinese markets are always relatively volatile. Factors such as a growing trade war, recurring concerns over the Chinese financial system, the real estate bubble, and uncertainty around the government stimulus will likely drive volatility in 2025. At any point of time, and I think that's going to happen soon, as US President Donald Trump ups the ante with respect to tariffs on China, you will see the Chinese stock markets also correct, which could be favorable for the India equities. When this can happen, do we have our own analysis ready to present it to you? Yes, we do. Do join our Premium Plus, which gives you 10 to 12 days predictions in advance. Plus, it tells you when the markets and how long it can turn, how much of a rebound is expected, and when it can turn back again downwards. To join our Premium Plus, please do WhatsApp us on 9820861044. Happy investing and have a nice rest of the day. Take care. Bye-bye and God bless you all.